it's Rick with Realty Austin. It is time for your November 2021 market update. Gonna hit you with some numbers to kind of get you an update on what's going on, talk about investing in the Austin area and kind of where prices may be going. And then also wanted to chat a little bit about Zillow's implosion, what happened a couple of weeks ago. So here we go. Start off taking a look at the most current data for the Austin area. So here we have total listings for the Austin area. So as you take a look at this, you'll see this year, like right now, we are just starting to come even with where we were last year. And you can see seasonality, the 3 years prior kind of up on the upper right-hand corner. You can see the number of listings that come on the market start to taper off as we head into the holidays, which is exactly what they're doing now. So I would imagine we will see things start to curve down a little bit on this graph over the next 2 months. Moving over to monthly inventory, this will give you an idea of how many months it takes to sell a home. So for example, as we're looking at right here, right now, year to date for where we were just ended up at, 1 month is how long a home would be on the market before it got sold. So you can see kind of a normal for this time of year would be somewhere between 2 and 3 months in the years past, but obviously that is not the case. So it's been really solid. Homes are still selling really quickly in the Austin area. Homes under 400 for sure. That's kind of becoming the new first-time home buyers entry-level home price point between 3 and 4. Those are still moving really quickly right now. Homes above 400,000 are tending to stay on the market just a little bit longer. And as you can see, average sales prices we've been talking about on each one of my videos this year, prices continue to go up and up. Good news is, as you can see here, prices are starting to level off. I think this will be a little bit temporary. As we head into the holidays, they should still continue to level off, but we hit spring market next year, February, March, we'll start seeing prices go up a little bit. Crossing my fingers that we do not see the huge spikes that we saw last year. So it should be more of a normalized spring market in terms of price growth. All right, so I want to chat real quick about housing affordability. Right now, homes are slightly less expensive monthly payment-wise than they were 10 years ago, and that is courtesy of interest rates. Interest rates are still at near record lows. As you can see on this chart, that this is average prices, so this is our new crazy prices now compared to where prices were 10 years ago. So your monthly payment is still going to be a little bit less, assuming 20% down at our current interest rate here. So still a really good time to buy, even though homes are much more expensive. Monthly payments are still very reasonable. And other good news when it kind of comes to personal finances here, housing affordability. So here we have the payment to income ratio. So right now, folks have money in the bank. They don't have as much debt as they had years ago. So that also is helping to make houses affordable. So that coupled with everything else we've talked about is one of the reasons why homes are still selling so quickly, because they are truly a great investment. So as you may have seen in the news in the last couple of weeks, Zillow had what was called an iBuyer program. They scrapped that program over this year, and especially in summer. They snapped up around 7,000 homes across the nation in the last couple of months. They massively overpaid for those homes. So now they have decided they are no longer going to be doing the iBuyer program. So they're not going to be buying homes from sellers anymore. They're going to leave that to other folks. One of the things that makes that a little bit interesting now is they're selling off their inventory. So they don't plan on doing anything at a fire sale price. So they're going to sell it to, they say, three different types of buyers. One is the regular buyer like you and I, home buyers. So they're starting to drop prices on the homes, but not significantly. They have a tendency to overprice their homes when they put them on the market, and I don't think they'll be putting them at a fire sale price. They're going to do incremental price drops, and eventually they'll catch up with the market. They're also selling to a few nonprofits. I can't imagine there'll be a whole lot of that in it for them. And then the other one is kind of interesting. They're selling to institutional investors. So big hedge funds are starting to buy up big blocks of homes. So they'll buy hundreds of homes at a time. And what they do is they just turn those homes into rentals. So one of the things that's kind of interesting about that is when the institutional investors buy these big blocks of homes and turn them into rentals, that takes homes off the market for you and me, the average consumer, to buy. So that also helps to drive up prices a little bit. So I think we're going to see that trend for the next couple of years, where there's a lot of hedge funds and so forth out there because they see the value in real estate and they're going to continue to buy big blocks of homes from time to time. So I would certainly encourage you, if you haven't bought a home, now would be a good time to get on the phone and talk to your agent and me, of course, and chat a little bit about putting together a strategy to get you in a home before prices continue to go up. So please feel free to reach out with any questions. Have a good month. Thanks.